Hey guys, welcome to Mastermind Traders Academy. My name is Ray, and today we are going to be looking at how to trade the market in its simplest format. So, before I get into that, I want to say that one of the first things that a trader needs to do is to understand how the market actually works. It's important to understand how the market works because without that underlying information, you're simply just gambling. So, you do have a lot of traders that will say, oh, they want to learn a strategy. They want to learn a strategy. But how can you learn a strategy if you do not understand how and why that strategy actually works? And in order for you to become consistent, you have to be confident. And if you're not confident in your strategy, then you can kiss consistency goodbye. So, one of the first steps in becoming a Forex trader is simply understanding how the market works. Now, it's not a get rich quick. It's not multi-level marketing. It is another means of financial freedom. It's another vehicle for financial freedom. Simply put. So I urge you guys, instead of jumping in trying to acquire a strategy that is deemed to be 100% win rate or 80% win rate, it's all crap because that is not there. Finding a 100% win rate strategy or even an 80% win rate strategy is simply not there. It's just a marketing tactic. Believe me, I should know because I have been trading for over 14 years. So, with my years of trading and my years of experience in the market, I kind of know what works and what doesn't. And one other thing that I will tell you that simply does not work is having a lot of indicators on your platform. Indicators were designed for you to fail. I cannot make it simpler than that. Indicators were designed for you to fail. Now, not to say there's not an indicator out there or a few indicators that will assist in your trade methodology. There is. But too many people have to put too much emphasis on having 5, 6, 7, 10 indicators on their chart. For what? And it goes back to saying because of your lack of confidence in yourself and in how you analyze the market, you're putting your faith and trust in these lagging indicators. So that does not work. Now, our mission here at Mastermind Traders Academy is to help aspire traders become consistently profitable traders through trade psychology and market methodology. What do I mean by that? It simply means that what we do is basically help you adjust your mindset when it comes to the Forex market. What we do is help you to look at the market differently than how you're looking at it today. And at the end of this workshop, you're going to be understanding the difference between when you looked at the market prior to today and how you're going to be looking at the market when you all get back to your computer screens. So another goal of ours is to help you develop a market methodology or a strategy. Not showing you how we trade because how I trade is going to be different from how you trade. My days in the market or my time frame in the market is going to be different from your time frame in the market. So there is no way you will ever have the same success or the same results as I do because of perception and because of our psychological makeup. So it's important that you're able to develop your own unique style of trading, and this is what we're here to help you to do. Now, we have been around for a while. We have done seminars in Jamaica. We have done seminars across the US. So we kind of know a thing or two about the Forex market. Over the years, we have trained many students. Some have gone off to become professional traders, managing funds in excess of $1 million. Others have become full-time traders working from home in their pajamas, and others are just simply doing it as part-time for extra income on a monthly basis. So I've done a lot of workshops over the years. These are some of the testimonials that you're seeing here. So I think that I'm equipped enough to actually teach, coach, mentor aspired traders who wants to become professionals. So again, as I said, I've been around the block a few times. Now, one of my best trades to date is this trade that you're looking at here. This was from 2015. And for anyone that tells you that you're able to do this consistently every single day or every single week, they're lying to you. Now, in 22 minutes, in 22 minutes, I actually made over $33,000 in 22 minutes. Now, as I said, what we look for is consistency. But there are times when the market will be extremely grateful to you and extremely kind to you and give you the type of results you're going to see here. So this was a trade back in 2015. The Aussie dollar versus the US dollar. It was an interest rate announcement coming out. And based on the pattern that I'm looking at, which we will discuss later on in this webinar, based on the strategy, I expected price to go upwards. Now, if you look at the lot size, it's saying 40, which means each pip is valued at $400. Now, this takes nerve of steel to actually execute a trade like this. But as I said, doing it over the years, I've become immune to the market. I've become numb. Sorry. I've become numb to the market. And once I'm confident about a trade, I will execute it with everything I have. All right. So if you look at the bottom here, you're seeing 26,000, 31,000, and you're seeing as price continues to go in my direction, we're actually locking in profits at the same time. So in the event price goes against us, we're going to be closed out in profit nevertheless. So of course, if you look at the size of the account, it's over 300K. So of course, 40 lot size was pretty sufficient and we could manage that nevertheless. And if you can see here, we have free margin, $295,000. So again, we were nowhere close to being over leveraged in this trade. And again, as I said, this is one of my best trades to date because I made 33,000 in 22 minutes. Now, do I make money consistently month after month? Of course I do. But do I have home run trades like this every single day? No, I don't. But if you're in the market, you will have the potential of achieving results like this. Now let's keep going. The very next day, there was another trade. And if you can actually notice here, the similarity with the two trades. Can anyone actually tell me the similarity with the two trades? Just type it in the chat box. W's, double bottom. All right, you're close, but no, you're incorrect. All right, now let's go back a little bit. All right, now if you look at this pattern here, we were at a support level and the market created an inverse head and shoulder pattern. Now, inverse head and shoulder pattern is simply a reversal pattern from a downtrend reversing back to an uptrend. Like that. So what you're seeing here is the left shoulder. So LS, you're seeing the head, and you're now seeing the right shoulder. There we go. Right shoulder. So that is considered to be an inverse head and shoulder pattern. Now, the very next day, as I said, we had the same pattern emerging. Oops. Right, so the very next day we had the same pattern literally emerging in the market. So we have the left shoulder, we have the head, price rallied up, pulled back, created the right shoulder, and then the market took off. So once you're able to understand how the market actually works, you're going to be actually getting trades like this on a frequent basis. Now, it may not happen where you're making 6,000 on a trade in 5 minutes or 33,000 in 22 minutes, but it does mean that you have the potential of constantly making money in the market by simply identifying patterns like this. All right, let's keep going. And I will tell you something. These patterns happen over and over and over again in the Forex market. And let me give you an example. All right, so here we have a USD JPY pair, one of my favorite pairs. And as you can see, guys, market goes down, pulls back, down, pulls back, down, pull back, down, pull back, down. All right, so price actually broke this level of resistance, and then eventually price found itself heading back down again. Down, pull back, and look what we have here. Inverse head and shoulder pattern. Left shoulder, head, right shoulder. The market starts going up again. Up, down, rally, pull back, rally, pull back, rally, pull back, rally, pull back. So this happens over and over and over again in the Forex market. We just have to be able to identify these patterns accordingly. Now, what I'm going to do with you guys here is just to go through a simulation with you, a trade simulation with you, how to find and identify these key areas of resistance and support in the market. So here we go. Let me get rid of this. All right, so we're on a simulation platform here, and we're still on the USJPY. As I said, it's one of my favorite currency pairs that I like to trade with. Now, what I'm going to do is identify a level of resistance and a level of support. Now, of course, on this chart from where we're starting right now, the only level of resistance we can see, the only decent level of resistance that we can see is right here. That level right there. So if I was going to trade this, then I would want to see price hitting this level of resistance. And if I'm looking to exit the trade, then I want to see price exiting. I want to see price hitting this level of support. So this is going to be my target. This is going to be my entry area. At this current moment, price is in the middle of no man's land. So I wouldn't look to trade this at this point. I'll wait to see if price is going to hit this level. And if and when it does, that's when I'm looking to trade to go short or to sell the market. So you'll hear different terminologies in the market. Sell means short. And let me see. Let's see if I can actually write it here. So sell, short, and then we have long, which is to buy. So ever so often you'll hear the terminology sell the market, or we're going to short the market, or we're going to go long in on a currency pair. So sell is going short and buy is going long. So just something to take a note of, guys. All right, so let's get rid of that. All right, so what we're doing here is we're waiting for price to head to this level of resistance. Now, there